All right, let's dive into CME Group's latest earnings report for Q3 2025. It's a really interesting one because on the surface, they beat profit expectations, which is great, but they also had a surprising miss on revenue. So we've got this mixed picture, and we're going to break down what it all means. So what's the real story here? I mean, how do you even read that? An earnings beat usually points to great cost control, a well-run ship, but a revenue miss? That suggests slowing activity. It's a classic Wall Street puzzle, and it's exactly what investors are trying to figure out right now. Okay, first things first, let's get right into the headline numbers and see exactly how CME's performance stacked up against what the analysts on Wall Street were actually forecasting. And right away, you can see the split personality of this quarter. On one hand, you've got non-GAAP earnings per share coming in at $2.68, a solid beat. But on the other hand, revenue was $1.5 billion, which was just a little shy of the target. What that tells you right off the bat is that the story this quarter isn't about explosive growth, it's about disciplined management. Now, if you dig into that revenue miss, you find the real culprit. Look at clearing and transaction fees. They're down over 5%. And why? Because the average daily volume, or ADV, plummeted by 10.5%. Basically, the markets were just calmer. Less volatility means less trading. But here's the silver lining, and it's a big one. Market data revenue. It hit a record $203 million, up a whopping 14%. This is huge because it shows their strategy to build a steady, reliable business that doesn't depend on wild market swings is actually working. So how did the market take all this? Well, pretty cautiously. The stock actually dipped in the pre-market, hitting a low of about 262 on that revenue and volume news. It spent most of the day clawing its way back, but it still closed just a little bit down at 267. You know what? The stock's journey for the day really tells the whole story. Investors respected the strong earnings, but they're definitely a bit hesitant about where the growth is going to come from in the short term. So, with the numbers being, a bit of a mixed bag, management on the earnings call really wanted to shift the focus. They wanted to talk about their vision for the future. So, let's break down that strategy. And CEO Terry Duffy really set the stage with this quote. The message was crystal clear. Yeah, this quarter had some headwinds from a calmer market, but our long-term game is all about innovation. It's about expanding what we do to capture the next wave of growth. Look, they didn't shy away from the elephant in the room, that 10.5% drop in average daily volume. They know it's a direct result of market volatility cooling off, and it's absolutely the primary challenge they're up against. But their immediate counterpoint was this number, a record $203 million in market data revenue. And this is so crucial to their story. The point they're making is that while trading volumes will always go up and down, this high-margin, recurring revenue stream gives them this incredibly powerful and stable foundation to build on. So how are they going to do it? How are they going to grow outside of just waiting for the markets to go crazy again? Well, they laid out these 4 key pillars. They're jumping into crypto trading around the clock. They're trying to tap into a massive new retail audience through a partnership with FanDuel. They're getting deeper into the treasury market with broker tech, and they're rolling out a bunch of new innovative products. It's a full court press to widen their reach. Now, of all those things they talked about, one topic just completely took over the Q&A session. Everybody wanted to talk about it, and that was the new partnership with FanDuel. And it led to the question that, let's be honest, was on every single investor's mind. With these new event contracts blowing up everywhere, is CME, the biggest exchange in the world, about to get into the sports betting game? And Terry Duffy's answer was really, really specific. He made it perfectly clear this isn't about whether they want to do it, it's about regulation. He's saying, look, we're ready to go, the technology is there, but we will not make a move until we get a 100% clear green light from the federal government that these contracts will be treated as financial swaps, not as gaming. So really, the ball is in Washington's court on this one. All right, so let's put it all together. What's our take on CME Group as we head into the next quarter and beyond? We're landing on a market perform rating for CME, and here's what that really means. This is an absolute best-in-class company. It's a financial fortress with an amazing business model. But right now, the stock seems pretty fairly valued. All the good stuff, that strong data business, the great cost control, it's being balanced out by this temporary slowdown in trading and the fact that there isn't a huge obvious catalyst right around the corner to kickstart growth. So looking forward, what are the key things that could actually move this stock? Here's what you need to keep your eye on. Number 1, first and foremost, is any return of macro volatility. That is the engine of their core business. Beyond that, we'll be watching the launch of 24/7 crypto to see if it gets real traction. We'll see if they can keep that pricing power in their market data division, and of course, we'll be looking for any hard numbers on user growth from those new partnerships. Okay, and now for a potential trade thesis. Think of this as our outrageous but plausible idea for early 2026. The premise here is really simple. This quiet, low volatility market we're in now, it's not permanent. It's cyclical. History shows us these periods of calm don't last forever, and when they end, it's often sudden. So you just need a catalyst, maybe an unexpected move from the Fed, some geopolitical event, and suddenly everyone rushes to hedge their risk, and CME's volumes explode. So a potential action could be to use long-dated call options to position for that surge. It's a capital-efficient way to make a bet on a return to market chaos, which is the exact environment where CME's business absolutely prints money. So the big question is this market calm the new normal? Or is it just the quiet before the storm? The answer to that is probably going to tell you where CME stock goes next. This is not financial advice.